right. Thank you very much, everybody, for being here tonight. Really appreciate you making time come out for one of our events. We do these events, Know Your Rights and other type trainings and workshops throughout the year. You can follow all the different event postings on our website. And we're so glad that you could join us tonight. So tonight we'll be talking about collections, how to deal with tax bills. And you'll be hearing from Brooklyn Legal Services Corporation staffers, Charles Healy and Maurice Elbaz. So first, I'll just give a little bit of an introduction for those of you who might be a little unfamiliar with Brooklyn A. We are a legal services nonprofit. We were founded in 1968. And since our founding in Williamsburg, Brownsville, and East New York, we use high-quality, low-barrier, neighborhood-based legal and advocacy tools to disrupt cycles of economic and racial injustice. We represent low and moderate-income individuals and families throughout New York City, not just in Brooklyn. Our clients live in rapidly gentrifying neighborhoods where many residents and small businesses face displacement and illegal landlord harassment. Last year, we served close to 13,000 residential tenants, homeowners, taxpayers, and small business owners through our 3 program areas. And you can see on the slides here, our 3 program areas are the Consumer and Economic Advocacy Program, which works with homeowners and on things like deed theft. And that's also the area that program area that our event tonight falls in. We have our Low Income Taxpayer Clinic, which Charles will talk a little bit more about, which helps low-income New Yorkers deal with tax issues. We have our community and economic development program, which works with small businesses and nonprofit organizations, which help them with things like commercial lease assistance and rent negotiations and other community building work. And finally, we have our Preserving Affordable Housing program, which does work like tenant advocacy, eviction prevention, and anti-harassment, and helps get repairs and essential services done. We are a very accessible organization. We have Spanish speakers. We have language access for a lot of different languages. So if you or someone you know needs help in any of these program areas, please do reach out to us. You can find our contact information here, phone number 718-487-2300, and you can email us at info@bka.org. We also have 2 offices, one in Williamsburg, we actually have 3. We have the one in Williamsburg, and one in Bed-Stuy right now that you can walk right into. We're in the office from 9 to 5, Monday through Friday. So I will now turn it over to Charles, and he'll walk us through our agenda.
Hi, yes, so my name is Charles Healy. I'm a staff attorney here, Brooklyn Legal Services Corporation A. I'm really glad to be here with you tonight to be talking with you about this important issue, which is collections, specifically tax collections and how to deal with your tax bills. As Will mentioned, there are 3 units with Brooklyn Legal Services Corporation A, and I'm with the Consumer and Economic Advocacy unit or program. And so that's also abbreviated as CEA. So if you hear me say that, that's what I'm referring to. And CEA has within it a foreclosure prevention unit, which is a unit where we assist homeowners who are facing foreclosure. We assist them in various ways, which that may be helping them obtain a mortgage modification. It may be helping them apply for a grant program, and it may also be assisting them with a case in court where they're being sued. They're the defendant in a foreclosure action. We also have, in addition to the foreclosure prevention unit, a low-income taxpayer clinic. And our low-income taxpayer clinic is designed to assist taxpayers in resolving their IRS issues. We also assist them with resolving their state issues if they become a client. So it would be an IRS issue and a state issue. We could work on both. We represent our clients in state court as well as in federal court. In the when it comes to federal court, that could even be in bankruptcy court or a United States tax court, depending on the circumstance. So I'm really glad to be here tonight with you guys. I also have with me Maurice, who's an intern, and he'll be helping me out tonight by presenting a lot of information as well. So what we're talking about tonight is tax and collections, and basically dealing with your tax bill if you find that you have one. So just an overview of the topics covered. We're going to first go over some basics on income taxation. I'll also talk about important collection events and resolution methods if you do have if you do find yourself owing tax to either U.S. government or New York State. And then finally, Maurice and I will answer questions that you might have about the materials discussed tonight. If we can go to the next slide. Okay, and next slide. Okay, so I want to make sure to talk about some income taxation basics so that we're all on the same page with just some fundamentals with what we're talking about here. So if you have taxable income for a given year, the tax will typically be owed to two different governments. That will be the federal government, which they collect through the IRS, and then the state government, depending on which states are involved in your situation. So what we're going to be focusing on tonight is New York State. And a lot of times, if you basically, in a typical situation, a taxpayer will have they may have a job, they may be employed, and every pay period they'll notice that income is withheld from their paycheck and sent out to federal government and the state government, and that'll be happening every single paycheck. For self-employed people, they may be sending money on a quarterly basis to federal and state government to cover their ongoing tax obligation that way. So this is how people are taking care of their tax burden throughout the course of the year, so they don't owe it all at once. However, even if you're doing this on a regular basis with every single paycheck, for instance, you may find as you prepare your return, or as your return is prepared by your tax preparer, that you still actually owe some money. And if you find yourself in that situation, we're going to talk about today how you can deal with that. So we can go to the next slide. Okay, so there are some events that are important milestones in your collection sequence. I kind of hesitate to say sequence because these can happen out of order, or there's no particular order necessarily for when these will occur, but this might be a standard order. So the filing of the return, as I say return during this presentation, what I'm talking about is the form that is used to prepare your tax calculation. Return is also used by some people to refer to the refund that they get after they have already filed their taxes and they're owed money back. That is sometimes referred to as a return as well, but What I'm talking about here is filing the return, the form where you do your calculations. The mailed notices, you might receive mailed notices. This is another important event to take note of if it's happening to you. Also, responding to these notices and doing so in an efficient way, that's another important event. And finally, resolving the balance if you have a balance. So we're going to spend a lot of time on that tonight. If we can go to the next slide. Okay, so filing returns. One of the things I just want to take a moment to mention is that the deadline next year is going to be on April 18. So on April 18 in 2023, you will, by that point, unless you have filed an extension, you will have hopefully filed your tax return for the year 2022, this year. So every year is you basically you file the following year for the year in question. So next year, which will be 23, we'll be filing for 22. When you're filing a return, there's one of the ways you can think about that is you are providing your own calculations, using the instructions or through the assistance of a computer program, or your preparer will be doing this. You're providing your own assessment of your own liability. So that's one of the features of our tax system in the United States, is you provide your own assessment of what you honestly think that you owe for the year. And that's just something I think is important to keep in mind as you do it, because you're basically providing your side of the story every single year that you are required to file. When you do file your return, it's important to keep a copy of it, of both returns actually, for New York State and the IRS return that you send in. And also, it's important to keep a copy of a submission confirmation if you are filing electronically. That would be a page that is generated by the system that you're using or that your preparer is using, which is visual proof that you have completed and filed a tax return and submitted it. So it's important to keep that. If we can go to the next slide. Okay, so another group of events that can occur is receiving a notice. So when you owe the federal government through the IRS, or when you owe New York State, you will receive a notice in the mail. And I want to take a moment here to mention that if you receive a phone call out of the blue stating that you owe money and you never received a notice in the mail, then you want to be careful about a phone call like that, because the IRS doesn't pick up the phone and call every taxpayer to demand payment. And New York State does not do that either. You can just imagine how many calls that would take given the number of taxpayers. That's just not what they do. So if you do receive a call like that, there's a good chance that it's actually not the IRS or New York State. It's someone posing as them, hoping to scam you. If you have any doubts about that, if you get a call like that, you can let the person on the other end know, thank you very much. I'm going to take a moment to look into this. I appreciate your call, and then close the call out. Following a call like that, you could then use an online account that you open with the IRS or New York State. and review the information in that account to see if you do in fact have a balance. And if you could also give a call to the IRS or New York State using a number that you locate on an official IRS or New York State website. Those would be the best ways to really pursue that if you do get a call like that. But back to mailed notices. If you do get a notice in the mail, it's important first to, it may cause you to panic because you've gotten a notice and it says tax on it and it's from the government. It's important to just take a moment to read through it carefully to understand exactly what is being asked of you or what information is actually being conveyed through the notice. It may be a notice that additional tax is owed, but it may actually be a notice saying that the IRS is proposing an amount is owed, in which case you could have an opportunity to respond to that notice with proof that you don't actually owe. The notice may be asking for something entirely different. So it's important to just understand what exactly the purpose of the notice is. And then you know what the next step that you need to take is. If you have any doubts at all about any information in a notice that you receive, it's really advisable to seek assistance from a tax professional. And you can, if you have an accountant, a tax attorney that you know and trust, that would be great. If you don't have one, you're encouraged to contact low-income taxpayer clinic. That's what we do here. We have a low-income taxpayer clinic. So we're glad to, if nothing else, talk with you. We can review a notice and provide additional insight as to what it actually means, and potentially help you in resolving that notice or resolving whatever issue is set out or outlined in that notice. If we can go to the next slide. Okay, so responding to notices, this is really the next event. Once you've gotten a notice, you want to review it and understand when and how you need to respond. A lot of them do contain deadlines for when you have to respond by. Some of the important, at least one of the important deadlines is a deadline to file a petition with the United States Tax Court. If you receive a notice that has that deadline listed on there, it's really important to present that information to an attorney or someone who would be able to assist you with that, especially if you don't feel comfortable doing it yourself. Once that deadline passes, you don't have any more time to file a petition with the United States Tax Court to resolve that liability if you have grounds to do that. So you want to understand the purpose of the notice that you got so that you could either follow the instructions given in the notice or have someone assist you in complying with the requests outlined in the notice. Finally, I want to mention on these that a lot of the notices come with documents that you can sign. Please be careful before signing a document and sending it into the IRS, because that document could be a legally binding document. And what they're often doing in these notices is providing you an opportunity to agree to something. And you may or you may not agree to it. It's just important to know what it is that's actually in the notice. So I guess the bottom line here is just don't sign something thinking, okay, all I have to do is sign it and mail it in and I'm done. You don't want to do that. you would only want to sign something if you fully understand it and agree with what the document says. So that's another reason why you would want to talk with a tax professional if you get a notice that is asking you for signature or that includes a form where you could sign. Let's go to the next slide. Okay, so the next step is really, or the next event is really resolving a balance, if you have a balance. So there's multiple methods that you can take to resolve a balance that you have, whether it be with the IRS or with New York State. So Maurice is going to talk about some of those. So I'll pass it to Maurice now.
Thank you very much, Charles. Could we please go to the next slide? Thank you. So we have 5 major methods that we're going to be discussed, which include paying the balance in full, creating a payment plan, making an offer in compromise, innocent spouse relief, and postponed collection, which is often used in conjunction with another method, but we'll discuss that a little bit later on. Could we please go to the next slide? Thank you. So the first method to resolve an issue with the IRS or in New York State is to pay the balance in full. If you have the funds available to simply pay off your balance, that's usually the cleanest and easiest solution to that problem. Something to note is that if you do pay off the balance in full, you're essentially agreeing with New York State or with the IRS that you do in fact owe that specific amount of taxes, and then you simply pay it off. There are a few benefits to doing a one-time payment if you are able to do so. The first is that you fully resolve your tax issue and are able to move on from it. So you no longer have to worry about getting notices in the mail, about maybe the government trying to do something else to claim the taxes. There's no more stressing over it. It's once you pay, it's over. And additionally, there are a few different ways that you could that you can do a payment in full. You could do so through online, which is a very easy method, and you receive a confirmation almost immediately that the payment is received. We would like to mention that if you do make a payment online, to please make sure to keep a copy of that confirmation for your own records. That could either be done by printing out the confirmation page or taking a screenshot of the page using a computer. And then that way you always have in your own records proof that you did pay off that tax obligation, just in case something happens in the future. Another method that you could use to pay off your balance in full is through the mail. We would recommend that if you do use the mail system, to use certified mail whenever possible. That way you ensure that your package is delivered and received safely. And we also recommend that you either photocopy or take a photo of the check or money order that you use to make the payment. That way you have in your own records, again, something that you can show to prove that you did in fact make the payment. And one other benefit for the payment in full is that with some of the other methods, there might be an interest payment you have to pay on any unpaid taxes. However, with a payment in full, once that payment goes through, you're no longer subject to any interest or any additional fees. So that's why that the payment in full is one of the more easier and cleaner methods to settle a tax debt. But if you'll see on this next slide, that another method available to you is through a payment plan. So under a payment plan, you make an agreement with New York State or with the IRS to pay off your total debt through monthly payments. It's important to note that a payment plan has to be done through an official agreement with the government. So that means that you can't just send in payments every month and hope that the government is okay with it. What you have to do is you have to make that full agreement either online, over the phone, or by sending in the requisite forms. And that way, what the government will do once they make that agreement with you is they will change your account to note that your tax issue is being handled and that they will no longer send you additional notices or come after you for your tax liability as you're paying it off, as long as you are making those monthly payments. In terms of those monthly payments, there are three things that goes into them. There's the total tax debt that you have to pay off. There's the number of months that you're going to be taking to pay off that tax debt. So if you owe the IRS money, you could have up to 72 months to make those payments. If you owe New York State, that could be up to 36 months. And additionally, throughout the life of the payment plan, any unpaid taxes are still subject to an interest expense, and that is factored into your monthly payments. And so there are some additional considerations within the payment plan. If you are leaning towards being able to pay it off at once or through monthly payments, keep in mind that the interest will make the monthly payments total a slightly higher amount than the one-time payment. There might be some setup fees that are required for a payment plan. However, these can be waived or reduced if you qualify based on your income. And can we please go to the next slide? And so now the third method that you could use to to settle a tax debt with the IRS or with New York State is an offer in compromise. So an offer in compromise is very simple. Essentially, you make an offer to New York State or to the IRS that you will give them an amount that is less than your total tax liability, and that amount will cover your total tax liability. So for example, you might owe the IRS $10,000 and you could make an offer to compromise with them for, let's say, $500. It's important to note that the minimum amount that they will accept is $1, but the amount they will accept depends on your total application and the reasons for your offer and compromise request. So to go into some of those reasons why you might request an offer and compromise, the first is doubt as to liability. This is when you have a legitimate reason to assert as to why you think the government is overcharging you for taxes. So an example of that might be perhaps the government thinks that you had some extra income that you really didn't have, and so they might be charging you taxes on that. That would be a reason to submit an offer and compromise form. Additionally, maybe you might qualify for a certain tax benefit that the government didn't take into account. And so they might be charging you extra because you're not being given that tax benefit. So those are reasons, legitimate reasons, as to how you could support a claim for a doubt as to liability. The second reason why you could fill out an offer and compromise would be to claim a doubt as to collectability. Or in other words, you simply just don't have enough money to pay off the tax debt. So within this, you would have to send a lot of documents to the IRS or to New York State, basically showing your current financial status. So that would include things like bank account records, previous tax returns, and a few other documents as well. And you would essentially be saying to the government, I can't afford my total tax liability. This is the amount that I'm able to afford. And they may or may not accept that offer amount. The third reason that you could use to support an offer and compromise is through fairness claim, which is to promote effective tax administration. So in this situation, someone would have a small amount of income or some savings that hypothetically they would be able to use to make a tax payment, but in actuality, they really need that money for other necessities, such as buying food from the grocery store, being able to pay rent. So in these situations, the IRS wouldn't want you to have to go and live on the street because you have to make these tax payments. So you could show to the IRS that, yes, I do have some money, but I really can't give any of it to you. And so on the next slide, we have some other considerations for an offer in compromise. The first is the time to process. So an offer in compromise does take a little while to go through. If you send an offer in compromise to the IRS or to New York State, it can take about a year for that to be fully processed. However, it's important to note that while the offer in compromise is submitted, the government can't continue to go after you to collect your taxes until they fully review your offer in compromise and give you a decision. Either they accept it or they reject it. Some other considerations within the offer in compromise is that you must be current with all tax filings. So that means you can't have missed any previous tax returns. You have to have filled out all your tax returns for all previous years. And another qualification within that is that not only do your personal tax returns have to all be satisfied, but all of your business tax returns have to be current as well. So what that means is if you own a business, if you're associated with a business, that business also has to be current on its tax filings. Otherwise, your offer in compromise proposal could be automatically rejected by the IRS or by New York State. And finally, there is the documentation requirement for an offer in compromise. To submit an offer in compromise can be a long process that involves numerous different documents as well as the required forms. As mentioned previously, you might have to submit a number of bank statements, previous tax returns, other relevant documents that basically establish your levels of income, or basically something that proves your claim for your ability to pay, or any of the other reasons covered previously. And so when you're filling out an offer in compromise, either by yourself or with a tax professional, you should be very careful to pay attention to all of the various aspects of the forms to make sure that you have all of the documents you need to show the IRS or New York State why you don't have to pay as much taxes as they assert. And so now I'm going to pass it off to Charles to discuss the next method that can be used to resolve a tax issue, which is innocent spouse relief.
Okay, so this is called innocent spouse relief. This relates to very particular circumstances. Per one of the things that's really applicable is if the taxpayers are married at the time of the during the year in question. So I'll explain that a little further. The first thing to understand, though, is a concept called joint and several liability. So tax is what's called joint, and there's joint and several liability for tax, income tax. And what that means is that both both spouses in a marriage are equally responsible for the payment of a tax that is assessed for a given year. So we can take an example of a married couple who were married in 2018. If spouse number one within the couple made $100,000 and spouse number two made $0, even though the second spouse didn't make any money that year, they are still equally responsible for the resolution of that tax liability going forward. So it doesn't mean that the tax will be paid twice. It just means that if one doesn't pay, it doesn't mean, so if one doesn't pay, then the other one still is on the hook for that tax. It's something very important to consider. So innocent spouse relief comes into play when you have a married couple and one of the individuals is really not is just really not liable for the tax. So I have here that they can request forgiveness where not involved in certain taxable activities of a former spouse, for instance. So to talk a little bit more about that, an example would help paint a picture to help understand. So if we talk again about a couple that was married in 2018, we could use the same couple where spouse number one reported $100,000 of income and spouse number two reported zero. Spouse number one could also have had a secret financial account through which they conducted transactions, like they were trading stocks or something else like foreign currencies or something, and generating income within that account. And when I say secret, what I mean is the other spouse really had no idea about that account. Spouse number two was totally unaware that this activity was taking place and didn't benefit from it. Spouse number one kept all the income in that account, didn't tell spouse number two about it, but was definitely generating income through a secret account. Down the line, when the IRS finds out about that, they will assess a tax on the income generated in the account. And technically, both spouses would be liable for it. In that circumstance, assuming the couple has separate, or we could say the couple has separated, whether they're divorced or not. Spouse number two would not really, let's say spouse number two is now living independent of spouse number one, who was doing all of these things. It's not really fair for spouse number two to bear the burden of paying the tax on the income generated in that secret account. That spouse number two, would be probably a great candidate for the innocent spouse relief application. So they could, with the help of a tax professional, fill out this application, provide supporting documentation, a letter of explanation, and request that they be absolved of any liability for the tax attributable to those transactions occurring in the secret account. If we can go to the next slide. Okay. The last thing to talk about here is postponing collection. This is something that you can use in combination with the other things that we talked about, the other methods of resolution that we talked about. What you're doing when you're postponing collection is you're asking either the IRS or New York State to forego its collection activities while you meet certain conditions. So for the IRS, when you're asking for them to postpone collection, you're asking to be placed in what's called currently not collectible status. The way to request this status is you'll fill out a form with, someone can help you out. If you have a tax preparer or a tax professional can help you out. It's a form that requests information about your current income and your current expenses and any assets that you have, and also your liabilities. So if you have assets that can be turned into cash, that will be, you'll have to put that on the form as well. And when the IRS is provided with this information, they will do their own assessment to determine whether or not you should be placed in this status. The, what they're looking for is basically, they're looking to see if you do have any extra income at the end of the month above your ordinary living expenses that could be used to resolve the liability that you have. If they decide that you meet the criteria and they place you in this status, it will be a temporary status. So it is not permanent for the rest of your life. It's temporary, and you are under an obligation to communicate with the IRS if your income situation changes, if you experience, for instance, a dramatic increase in your income, which would allow you to then pay. So this is something that you can do. You can, hopefully try to put this in place, for instance, to hold off on collection activity while you're getting things together for an offer in compromise or innocent spouse relief. Or if you do anticipate soon that you're going to have some income where you could resolve your liability in full or enter into an installment agreement, you might see if you can do this currently non-collectible status in the meantime. So that's available with the IRS. New York State does not have the same program. They have they just have an extension. So if you receive a notice showing that an amount is owed from New York State, you can request a one-time extension, which would basically go up to 60 days. So it's not as long a time as the IRS is currently not collectible status. But it is something that you can look into taking advantage of. So I hope that we were able to give you some good information on methods that you can use to resolve your tax bills if you have those, or if you've gotten notices. You can give us a call, 718-487-2300, or you can email us at info@bka.org. And if you have any questions about what we were talking about today, or if you're dealing with any of the issues that we were talking about and you want someone to see if we can be able to assist you with going forward on those, you'd be encouraged to give us a call, and we'd be glad to do a consultation with you. If anyone has any questions now about what we were just talking about, you have an opportunity where we'd be glad to talk with you a little bit.
Thanks, Charles. Thanks, Maurice. Yeah, folks, if you have questions, you can either type them into the Q&A bubble here. You can put up your hand virtually on your screen, and we can unmute you, and so you can ask your question directly, verbally. And if you're watching on Facebook, you can ask in the comments. So we did get one submitted question. How much interest does the IRS and New York State charge?
Okay, so we were talking earlier about interest accruing on your balances if you have any balances. The taxing authorities are under an obligation to charge interest on your balances. So the IRS currently has an annual rate of 3%, and New York State has an annual rate of 8.5% currently. So these change, these percentages do change, but it is important to remember that when you have a balance, there's going to be interest accruing on the balance. So it's part of it's something to keep in mind because you don't want to just let a balance sit. You want to take some kind of action to try to get it resolved.
Thank you. Not seeing hands, so I'll go to another submitted question. How long does it take for an offer in compromise to be reviewed?
So I'll take this question. Currently, the length that it takes for an offer in compromise to be reviewed is mostly determined by how busy the IRS in New York State is. At the current rate that they've been going, it looks like the IRS will take a little bit over a year to respond to an offer in compromise, and New York State will take a little bit less than a year. But that's, again, always subject to change based on how busy they get.
Perfect, thank you. We have a question here from William Garrett. What is the best way to remove a New York State income tax lien on your home?
Okay, so it could, if it's an income tax lien, there's two different types of liens. There's property tax liens and they're in New York State on your home. You know, you could have a property tax lien, but it looks like you have, or you might have an income tax lien. Resolving that is going to depend on your circumstances. So if you want to give one of us a call, or if you want to have a conversation with one of us offline, we'd be glad to do that. If you want to call our main line, which is 718-487-2355, or you can email us at info@bka.org, and we would be glad to talk with you more on a one-to-one basis about your particular circumstances and how you could resolve that issue. Okay, what happens if you've been denied? So the question we have here is, what happens if you've been denied innocent spouse 2 times? So that is another, I don't like to always keep giving the same answer of we'd like to talk with you offline, but it will, see, the innocent spouse relief is a very fact specific situation. So as we're discussing all these issues tonight, I would just want to make sure it's clear that, like, when you're applying for offer in compromise or innocent spouse relief, the relief is granted at the discretion of the taxing authority. So none of these forms of relief are guaranteed. What each of the authorities does is they take into consideration the totality of the circumstances. They look at all the documentation that you provided, and they look at your current situation, financial situation. It's a very comprehensive review, and that's why it takes so long for them to turn around and answer. It's not like a submit it on Friday, get an answer on Wednesday of the next week kind of thing. It takes a lot longer than that. So you may have received, along with your denials, letters stating the reasons for why the relief was denied. We would be glad to look at those with you and talk about what other forms of relief might be available to you. So please give us a call, 718-487-2355 or info@bka.org, and we can set up a consultation very quickly with you and talk about what's going on and look at your notices that you got.
Perfect. Other folks have questions? Like I said, feel free to type them. If you want to raise your hand, we can unmute you. And yeah, Maurice is putting our contact info again in the chat, our phone number and our email. Always feel free to reach out. We have one other submitted question. How do I know if a tax bill I received is real or a scam?
So that is a great question. One thing that you could do to verify a tax bill that you received is you can independently contact either the IRS or New York State directly. So you could go online, look up their website, and find a contact phone number that you could use to call. And then you could speak directly with an agent to verify if the bill you received is indeed real or if it is fake. Every document that the IRS will send you will have a reference case number attached to it, and you could use that to tell the IRS agent, and that will help them verify to you whether something is real or if it is not.
Excellent. Thank you. All right. Any other questions? Not seeing one on Facebook. Let's check our chat one more time. Okay, last call. If anybody else has questions. And of course, like Charles said, if you have specific questions or anything else, you can always call us and follow up or email us at info@bka. And then, yeah, I think unless anybody else, doesn't look like it. So I think we're in good shape. Thank you so much, everyone, for coming tonight. Thank you so much, Charles and Maurice, for the program. And wishing everybody a nice holiday tomorrow and a nice weekend. Thanks, everybody.
Yes, thanks, everybody.